Start the recording. Okay, let's see. Yeah, I think I'm just gonna share my browser because otherwise you guys won't be able to see too well. Because my computer screen's pretty big. Um, can you guys see me, like my face?
Yeah.
Could a minute ago. Yeah, now I can.
Oh, you
Now
can.
I can.
Okay.
Now I can.
All right. I don't know why people's mics aren't muted. I don't care if you guys talk that much, but I just don't want background noise. That's weird. All right, it's not a big deal. Okay, so let's dive straight into it. So first things first, this is a live webinar training. We're going to show you how to predict price action using 5 hidden market flows that makes price move. So that's the headline of this. Um, really the goal of this, obviously you guys are all here to trade. You want to, you guys are super passionate about trading. You want to make it work. Maybe you want to, another stream of income, or you want it to be your full-time job, whatever it is. But in this video, the goal is to reveal exactly how my 5 flow setups makes 10 to 20K per month, trading just 2 in-queue contracts. So we're going to skip through this a little bit, not try to take too much time. But my job today is cut your learning curve in trial and error, phase down completely. I'll teach you everything you need to predict the market in less than 2 hours.
Sí, estoy llorando. Pensó, mamá me dejó. Me dejó,
Hey,
mamá. Come
stop.
ahead.
Can you mute your mic? Bro, why are people's mics not muted? I hate Zoom. Okay, I think I fixed it. I might have fixed it. Yeah, I did mute all. I don't know why I say that. All right, guys. I think it should be good now. Does Apex actually pay out? Yes, it does. They paid millions of dollars. All right. That was a nice interruption. Let's keep going. Okay, so why are you failing at trading right now? Right? Well, we all kind of get stuck in this phase, and some of you guys are going to be, you guys are going to be all over this line. Some of you guys are brand new. Some of you guys have been doing this for years. Some of you guys a few months, right? So kind of want to give you the cycle of a trader. Some of you guys have seen this, but just to give you kind of a cycle, you start, you get super excited because you see everyone on social media making money with trading, talking about trading. I'm sure, like people I meet in person, I tell them I trade, and they're like, "Oh, that sounds really cool." Like they get all excited. It's like, man, you don't know how hard trading is. Like it's it's not always exciting, right? It's not always, they think it's like super easy once you figure it out. So, don't get the wrong mindset with trading. Like it's really hard. Even if you have a perfect strategy, that doesn't mean you're gonna, or not a perfect, even if you have a really good strategy that is profitable, that doesn't mean you're gonna be profitable, right? And I'm just being real with you. Like today, I screwed up trading today. I just made some dumb mistakes. So that's going to happen even when you have a good strategy. So you always have to keep that in mind. But this is kind of how the phases of trading go. You get beginner luck, you get euphoria, you start seeing maybe you pass an evaluation, right? And then that euphoria kind of goes down as the weeks or months, or some people, this is like a year long, 3 year long process, where you start losing due to bad strategy or psychology, right? So it's always one of these. You can have a really good strategy, bad psychology, you're not going to make money. You can have good psychology, really good psychology, you're super disciplined, but if you have a shitty strategy, right, you're not going to get anywhere. So most people blame it on the strategy, right? And that's kind of where, they start strategy hopping because each time you see a new strategy, you're like, oh, okay, this could be the thing that works for me. Oh, not really working. Oh, I found a new one. Okay, this could be the thing that works for me. Oh, not really working. Oh, and believe me, guys, I've done this as well, right? So this is the phase I don't want you guys to be in. Um, is hopping around different strategies. Like I said, we've all done this, and I think it's necessary to do this because you can't just, find one person on YouTube. He says it's the best strategy out there. You follow him, and then like that's it, right? For me personally, I feel like I had to try a little bit of everything to really understand the market, know what works, what doesn't, what makes sense with you. So I think it is important to look around and see what's out there and just do the thing that clicks with you best. Like what actually makes sense to you. Okay. And maybe what I'll be showing you today will, click the most for you. Right. If so, great. Stick with it. You see other people doing it. You see us, working with it. Continue with that. Right. And get really good at that strategy. So again, just don't get on that phase forever, right? I see your comment, Shane. Anyways, from there, right, once your strategy hop in, you finally pick something, right? You can either go and quit or you can decide to fully commit on one thing. So this is kind of where people split ways because they're constantly trying different things. And keep in mind, like these little phases can be 3 years long, 1 year long. So at a certain point, people get fed up. They're like, man, this is never going to work. It's kind of just back and forth. And puppy. My dog's making a lot of noise. Sorry, guys. You can either quit or decide to fully commit on that one thing. So from there, you kind of build a system. You find an edge. You see what works best for you. You start figuring out the best way to manage your trades, how to put where to put your stop loss, what your take profit looks like, how many trades you're taking today. Okay, do I have a max loss? You start figuring out your actual system, right? It's not just the strategy, but also the system you follow. And then from there, right, you start to see a little bit of profitability. You're not perfect. Maybe you start getting a 60% win rate, right? And this is where it gets hard because if you can stay a little bit profitable and just stay on that, right, you can eventually reach that maturity phase by making your system better. And yeah, so basically what I'm trying to say is I need you guys to be right here today. If you want to continue watching this webinar, I need you guys to be somewhere right here where you're like, okay, not strategy hopping. I want to commit to one thing. And I'm done playing around. Like, I'm here to make money. So, if you guys are with me here today, you're ready to build, or we already have the system in Edge. You really don't even have to do this. If you guys are ready to fully commit to one thing, let me know. And yeah, hopefully we get you to this line without it taking years. Can we get the recording for the webinar? Yeah, guys, it'll be posted after, probably tomorrow. All right, so now that you guys understand that, this is kind of the cycle of every trader. You eventually get to the maturity phase. You realize, you're never going to be perfect. You're never going to win every trade. You stop revenge trading. You stop getting FOMO. You realize, oh, it's okay if I don't take a trade every day, right? And this is hard to do. But eventually you reach that maturity phase, and this is something you have to work on every day. I struggle with this myself, to be perfectly honest. But this is where success comes from, is having that maturity in trading and also having a solid strategy that makes sense to you, that works, right? So obviously I can't control your psychology. I can help you. But what I want to do today in this webinar is to give you the strategy. So that being said, are you ready to be profitable? All right, looks like a lot of you guys are saying yes and ready, ready, ready. All right, so let's get into this. So what I'm going to be sharing today is called market flows. Now, this is also known as the Greeks. You guys have seen me been trading this for a few months now. I'm going to be calling it market flows because I feel like the term makes more sense, and Greeks is very confusing sounding. Okay, these are the flows of the market. All right, this is what it looks like. Okay, we're not trading candlesticks, we're looking at bars on a chart. Now, what the heck does this mean? How does it work? And how does it help us actually trade, right? What is it? Sorry, someone's calling me. So, for years, only Wall Street saw flow data. And this is real. I'm not making this up. Okay. Only recently did this institutional data become available to the public. Right. Now, you kind of think of this as, retail trades candles. That's what we've been taught to trade our whole lives. Everyone talks about candlestick charts, patterns, all that stuff. But pros trade flows. Okay. Almost every hedge fund, liquidity provider, they don't look at candlestick charts at all. They're looking at the flows of the market. This is behind the candles. This is what makes price moves at certain levels. Um, and they all have their own way of interpreting these flows, obviously, but this is what they're truly looking at. So we're going to be breaking this down. So what is a market flow versus a candle chart? Right? What's the difference? Well, candles show the history. Okay, that's literally what a candle is. You look on a 1 minute candlestick time frame, it is showing what price did over that past minute. Okay, it's the history of what price did. That's all it is. If you go on a 5 minute, it shows the past 5 minutes of history. You guys know this. The flows show the intent. Okay, flows reveal where institutions must act. Candles react late, flows predict early. Flows expose hidden pressure behind every move. Candles tell you what happened, flows will tell you why. Okay, so that's really kind of what I'm trying to explain is flows will tell you why price is doing what it's doing. Now, me personally, I'm a very logical person. I always need to understand why things work the way they do. And when people are telling you to follow a strategy when the MACD crosses, which is an indicator I used to use, I'm like, okay, but why? Why does the market move when two lines cross each other? Why does it move when it pulls back to a 9 EMA moving average? Like that doesn't make sense. Okay, flows is the only thing that really made sense as to why the market will actually move where the flows are telling you. Okay, and that's what I'm going to try to explain the best I can in this video, but it gets a little complicated. Okay, so what is the flow strategy? All right. So before I break down the strategy, let me try to explain why. Okay, so first off, when it comes to the market overall, you have futures, you have regular shares being traded, and then you have options, right? Most of us trade futures, right? So we have like we have futures, commodities, and then we have NASDAQ, S&P 500 on there. And then we also have the options market, right? The actual stocks. So did you know that 80% of market volume comes from the options market? Okay. If you ever wonder why the market closes, okay, and you know how futures is open 23 hours a day, the market doesn't move as much, right? And that's because nothing's going on. The futures, the NASDAQ futures, the ES futures, that's not what moves the market, right? Only around 20% of trading volume comes from people trading futures. And futures was invented as a hedging tool, right? That's why it was actually made, is now a lot of people are using it to trade. Huddle, please. Sorry. He's making a lot of noise. It's hard to talk and focus. But anyways, so that's kind of why futures was made, is as a way for, these big liquidity providers, hedge funds, to actually hedge. Or for example, let's say you make corn, right? You have a farm. Okay, I'm pretty sure corn is on futures, right? If you want to lock in the corn prices for next year and you're afraid and you're running a big farm or whatever it is the business is, you can go and buy a bunch of corn via the futures contracts, or same thing with cattle. You can trade cattle on futures. All right, so this is why futures is made. So anyways, most of the market moves from the options market volume. Now, when most of the majority of the market volume is coming from options. What this does is it creates massive dealer and market maker exposure, right? Because every time people are buying options contracts, right? People who provide that liquidity, they're selling it to you. So if you buy an option contract, someone else is on the other end selling it. Now, it's not always another retail trader that you guys are trading it to each other. There's these things called liquidity providers, banks, big firms, institutions that provide this liquidity, and their whole goal is to make money on fees and commission, right? They're not traders, they're not trying to trade, and these are big companies like JP Morgan, Goldman Sachs, right? These guys are providing liquidity to investors, traders, hedge funds, all that. Anyone, buying options throughout the day, right? So when these guys are constantly filling orders in positions, providing that liquidity, what happens is they have a lot of exposure, right? Because if you're buying a bunch and they're selling it to you, what happens? They're short on the market. They don't want to be short on the market. So what they have to do is they have to hedge their positions. Okay, they have to hedge their positions. If there's a lot of people buying, they have to sell those contracts. They have to go into the futures market and buy to hedge against what they sold to you. Okay, so that's essentially how it works. Now, what happens is we can measure this hedging activity using the flows, okay, or also known as the Greeks, like I explained it earlier. Greeks measure this flow. Okay, they measure the flow of these hedging actions, these market makers, liquidity providers, whatever you want to call them, have to do. So this is specifically gamma, delta, charm, vana. I'll explain what all these are. Again, they're just fancy names, but I'll try to break it down pretty simply. So those bars I showed you 2 slides ago, right? This is that measurement. Okay, that's that flow data. Okay, and what this does from there is it creates predictable push/pull on price, so you can see exactly how much they're hedging at this level, how much they have to hedge at this level, right? And you can see the pressure of those bars based on the size of them, if they're positive, if they're negative, all that good stuff. Now, once all of that is done, right, what happens is once price actually moves up or down, the candlestick chart shows what happened. So when you're trading just on a candlestick chart, right, you're basically doing the last thing. Okay, you're looking at the last thing on why the market moved, or it's not even why the market moved, it's just showing what the market did. Obviously, you can make trading work. I'm not here to argue with you that you can't make trading work with candlestick charts. I use them for years. But this actually explains why the market moves the way it does, and I think it's a way simpler and easier way to trade. And it will actually make sense to why the market's consolidating. Why is the market being defended? Why is it all volatile? Why did it sell off today, right? It will kind of explain that to you through these hedging actions that these market makers have to do throughout the day. As people are, taking trades, they're providing that liquidity. They have to hedge their positions so they can stay neutral in the market. Greeks measure that flow, creates, levels, key levels in the market we can trade, and then boom, candlesticks follow that, right? So that's my brief explanation of how it works. Now, let me give you an analogy to make a little bit more sense. So, for example, this is an airplane analogy. Let's say you buy a plane ticket to Hawaii for $1,000. Okay, congrats. You're going to Hawaii next April. Okay. Now, what happens if oil prices go up? Okay, if you buy an airline ticket in February or for March or whatever I said, and oil prices go up, what happens is, I'm sorry, I'm doing this the wrong way. Okay, you buy a plane ticket for $1,000 to Hawaii in April, let's say. Now, what's going to happen is the airline company, they have, just like the market makers, just like the liquidity providers, they have to hedge their positions, right? So the air company will receive the $1,000 that you just bought for the plane ticket, and they're going to invest $500 of that in oil stocks. Okay, and this is a real thing they actually do. Okay, so they're going to invest 500 of your $1,000 in oil stocks. The reason being is because if oil prices go up in the next 6 months, right, they are hedged for those prices, right? The air company will make profit with the future contract of oil, right? Because they invested half. If oil prices go down, let's say they drop by 50% in the next 6 months, well, then the flight will be way cheaper to take you. But if oil prices double and they charge you $1,000 for that ticket and oil's most of the costs of the flight, right? They're not going to just sit there and lose money because oil prices went up, right? So they're constantly buying oil in the future via futures contracts. They're hedging their position so they can stay neutral. They just want to make money on the flight, right? They're not trying to trade oil and make money from oil. They're staying neutral, so they're hedging. So this is the exact thing it's the exact same thing market makers do, or like farmers do this with cattle and stuff like that. So market makers, liquidity providers do the exact same thing by hedging their positions in the market. This means we are only trading with the big money at the same exact level they are. We see where these levels are and the significance of these levels by reading the Greeks, or also known as the flows in the market. Okay, so does this make any sort of sense to you guys? I know you guys don't know what to do yet. I'm just trying to explain the backstory behind why we're doing this. Okay, because this made a lot of sense to me, not at first, but as to like why the market will move the way it does. All right, seeing lots of yeses, so I think we're good to go. So what this basically means is with the flows, with the Greeks, whatever you want to call them, you will know exactly where price will get defended. You'll know exactly where price will accelerate. You'll know exactly where price will consolidate, right? Which is very powerful. If you know these three things, it's very powerful as a trader. Okay, so let's go over actually how this works. Okay, so we're going to dive into this. Okay, so the first thing this is the most important one, is called dealer hedging. Okay, this is where the levels where dealers are hedging. All right, so as you can see on the right, we have these bars. Some of them go up, some of them go down. So it's positive if they're going up, it's negative if they're going down. All right, I think anyone can understand that. The numbers on the side here, I would ignore them. These don't matter too much. You don't have to pay attention to that. But, and then obviously we have the levels, right? We can actually see, okay, this is price 560, this is 565, this is 570, this is 575. You can see specifically how much interest there are, how much hedging pressure there is on 575. We can see how much hedging pressure there is on 570. We can see from 570 to 571 to 572, we have increasing interest, meaning as price goes up, they're going to have to continue to hedge and buy more and more as we get to the peak, right? And what happens? We drop off, and we can see we have a pretty big drop off to 573, right? And then it drops down again to 574, drops down again to 575. After 575, there's nothing, right? So it's basically saying, okay, we have decreasing interest off of that, meaning this is going to be our main target for the day, the place with the most interest, right? This makes sense, right? So it's not anything harder than candles, like reading a candle pattern. It's just different, right? It's a little bit different. Okay. Now, does this mean we're going to stay at this green bar, this 572 level the whole day? No, it means we could go to 573, 574, even 575, but it's a little bit less likely. But if we're on 571 and we're holding above it, it's very likely we're going to get to this green bar eventually. Okay, so that's kind of how we can read it, which is very powerful. So, and typically when we do get to the green bar, that's where we tend to consolidate. So that's where we can see where price is going to just stick around, consolidate, stuff like that. Now, on the other side, we have this negative, right? You can see this is the first bar that goes from positive to negative, right? See how it's pointing down? right? And this is where volatility can start picking up. So whenever we're negative, we're going to have higher volatility. When we're positive, we're going to have lower volatility. You ever heard the saying, like, we take the stairs up and the elevator down? This is where that comes from, right? When we're grinding up to our level, right, we're going to have, just steady price action of not perfectly, but if you look on a 5 minute chart, it's higher high, higher low, higher high, higher low until we get to the target. Once we get to the target, we're going to consolidate a little bit and then we might pull back lower, we might pull back up. That's where it gets a little bit unsure, but on the way up, we're going to have steady price action to that target. Now, if we start going negative, when we break that first or second negative bar, this is where price gets crazy and they have to completely flip all their hedging positions into short, essentially. And this is where you'll see the market suddenly just drop straight down. It'll just go straight down. Maybe you'll see a little pullback here and there, but it'll just keep dumping, right? And this is because we enter that negative delta hedging territory. Remember, the liquidity providers, they control most of market volume, right? They're able to manipulate price. They're able to, they actually control close to 60, 70% of total market volume. This is because they're providing liquidity, which is already half, and then they're hedging on top of the liquidity they're providing, right? Which is like another 20 to 30% because they're constantly moving their hedges around. Okay. So they have a lot of control of the market, unfortunately. But if we can see exactly where they have to make their moves, where it makes most sense for them, we can trade with them, right? Then they become our best friends, right? Because we're just trading with them. They're making us money essentially. So that's delta hedging. Then this is going to be the most important one. We're going to focus on this mainly, but I want to share the other ones. So, and I'll get into questions in a little bit, but let me just keep on going into this. So the next thing is institutional flow. Now, typically, these two charts, dealer hedging and institutional flow, they'll almost be identical, but you can kind of treat institutional flow as just like a confirmation for whatever you see on dealer hedging. So dealer hedging is how you get all the levels. And then these two I'm going to show you, institutional flow and then time pressure. This is just like confirmation of those levels, right? So positive, it means institutions are bullish. Okay, so if we're in the positive, you can see tons of positive on this chart. This means it's super bullish. Like any pullbacks are going to get bought up on this day, especially at these bigger bar peak levels. Like if we pull back to here, good chance we're going to get bought up because of all this bullish pressure on the market. Negative, that's where institutions turn bearish, and you can see like the ratio. It doesn't always look like this. This is just a weird example, and this is what you want to see. It's like, okay, it's like 90% bullish pressure versus like maybe 10% bearish. So, you get stronger conviction, more confirmation. But tall bar is the strongest interest. You want the tall bar on institutional flow to line up with the dealer hedging bar. And I'll show you guys like how to put all this together. But anyways, let's see. You also look at VIX together with the Greeks. No, it's not really necessary. So basically, we're tracking the movement of market makers who have to be delta neutral. Yeah, exactly. Their goal is to be neutral in the market, and in order to do that, they have to hedge at certain levels in order to stay neutral. You got it. The order flow bars show the same things. Order flow bars, what do you mean by that? So keep in mind, these bars are showing up before price moves, okay? Order flow is typically when price is actually coming in, when orders are coming in. So it's delayed data, or it's real-time data, but it's not predictive, right? It's harder to trade that. Similar to volume profile? No, volume profile is after the candlestick. Okay, volume profile only works after. Okay, this is before the 1 minute into the market open, we can see the whole day. We can see exactly where the price is going to go, exactly where it's going to pull back the first minute of the market open. So this shows before everything. Okay, and I'll show that to you guys. Okay, it's completely different. It's a volume profile. It can work good because it shows where the most volume was made, right? And typically levels from yesterday tend to be key levels today. But again, it's not actually showing the intent, right? It's showing what happened after price did what it did. This is all before. Okay, so it's a little bit different. People are looking for ways to use other indicators, which are typically late. Yeah, again, guys, this is not a popular thing. Like there's not much on it online. You won't find much indicators on it. You won't find really any content on it online. It's very hidden. Okay, and again, like I said earlier, this stuff, um, this stuff only Wall Street saw this stuff. Only recently this data became available to the public, like literally. So just want to mention that. But anyways, let's keep going. So yeah, essentially these are kind of the same thing. You want them to match. We'll get into this more. It'll make more sense. But a tall bar means there's strong interest, meaning we want to go to that tall bar. Kind of explain that. A drop is interest fading. It's the end of the move. So you can see like from this bar to this bar, there's a pretty big drop. That means the interest is fading. It might be the end of the move. We could move there, but it's less likely. But like I said, if we're right here, right, and we have increasing interest, right, this move is likely to get bought up, right? So 3 bars on this chart is 120 points on NASDAQ. Okay, just to give you some perspective. You can easily find a trade within these 3 bars, right? You can easily find a 50-point trade, 40-point trade, even 80-point trade in these 3 bars because at some point we are going to go to this level, right? We have increasing interest straight to the level. We're going to go there. Let's get in on a pullback. That's what I like to do. Okay, we have similar data for SPY. Yes, exact same. So you can trade SPY or QQQ. Now, time pressure is a scarcity. So if you guys ever traded options, you know time decay, also known as charm. This is, so this is basically the scarcity of the contracts, where they're going to make the most money. If they bring price to this area, the options are going to get decayed the most. They're going to make the market makers are going to make the most money. So they're always going to want to pull it to the biggest bars essentially. So if we're positive, dealers will buy to the biggest bar. If we're negative, dealers will sell to the biggest bar. Peaking target zone end of move, rising continuation of current move. Okay, so for example, if the dotted line is always where price is currently, it's going to want to move up to this green bar and then it kind of drops from there. If it goes down, it's probably going to go to this bar, just kind of wherever or this bar. These are like the same level. And then it drops off from there. So they don't really have interest to bring it down here because they're not going to make as much money. So again, this is just a confirmation of everything else, and it might show you, oh, we're probably going to get more momentum if we go to this level. So it might give you kind of inside clues on that. But 80% of what I'm looking at is dealer hedging. So you don't have to focus too much on this. I mean, you definitely want to look at these to confirm, but you can find the key levels just from dealer hedging. And most of the time, these will all match up with it and be pretty similar most of the time. Okay. So anyways, that's a brief explanation. Now, let me show you this table to make it make a little bit more sense. Okay. So we got the flow here on the left, and then we got the 3 flow charts. So we have dealer hedging, institutional flow, and then time pressure. Okay. So essentially what it tells you, the delta hedging is the dealer reaction to price moving. Okay. Institutional flow is the net dealer positioning, bullish versus bearish. Time pressure is dealer hedging behavior over time. And behavior is this is like the speed, target, support and resistance zones, the bigger bars. Institutional flow is the volume and institutional interest, bullish or bearish. And then time pressure is whether dealers need to buy or sell. Okay. So that is essentially what they can be used for. Okay, now your goal is for all of them to kind of match up, which most of the time they will. You want to see them all kind of match up together, and that's going to give you good confirmation that. And sometimes the level will be a little bit different, so you might take profit a little bit earlier if they're not matching up perfect, stuff like that. But you just want to see, okay, like, all right, this level is the biggest bar here. That's going to be the target for the day. We have increasing interest to it. I want to take the pullbacks to that level, right? Okay, that also matches up with the institutional flow. That also matches up with the time pressure. Okay, we got a plan, right? That's kind of how I see it, just as confirmation. Okay, so let me actually get into the setups now, because this is where it'll click together, and then I'll give you guys examples over the past few months or so, or actually, yeah, over the past almost 2 months, I have examples of every day. I have a screenshot of exactly what the flows look like every single day, exactly what the chart did every single day to show you guys proof of how well this works. Okay, so we're going to get into win rate and all that stuff. Understand people like to trade options, but futures would be better because you can use prop funding compared to funding option contracts yourself. Yeah, so I don't trade options. We do trade futures, but we use the levels in the options market to trade futures. Okay, so I completely agree with you. I like futures trading way more. We just use price converter. So if we're looking at QQQ, we can convert whatever 600 on QQQ is into what it is on NASDAQ. And all that good stuff. All right. So 5 flow setups. All right. So let's get into the flow setup. So these are very specific setups. You can look at the chart and you'd be like, okay, this is setup number 1. This is setup number 2. This will make it a lot easier. Okay. So flow number 1. This is what I call buying flow. Okay. Essentially, we're looking at the market. Market just opened. It's 9:31 Eastern time. I trade CFDs. I think this can be employed there as well. Yeah, for sure. Anything related to NASDAQ that you can trade this. Okay, so let's say we open below the green bar, okay, and we have increasing interest to it. So this is the criteria of the setup, is what we're doing here now, guys. So this will give you specific trade criteria where you can look at this very easily and see, okay, we're on flow number 1. I'm looking for this specifically. Okay, and I will buy when we get this specifically. Okay, so this is what I follow every day, is these 5 flows. Open below the green bar, we have increasing interest to it. Next step, any pullbacks until we get to the target. Target is our biggest green bar. Okay, so what does this actually look like on a flow chart? Okay, so essentially it looks something like this. And this is even a good example. I just pulled a random day that this happened. But as you can see, the green bar is at 570. So just pay attention to this left one right here. Don't pay attention to these two right now. We'll get into these later. Okay, so just pay attention to this one. As you can see, the biggest bar is at 570. Where this dotted line is where price is right now. Okay, this is where price is right now. So this means we're just under 569. Now, again, every point on QQQ is 40 points on NASDAQ. Okay, so just to give you some perspective, 569 to 570, that's a 40-point move on NASDAQ, 44, 43-point move. So if we open up, okay, let's go back to the instructions. We open below green bar, increasing interest to it. Okay, are we below the green bar? Yes, we're below the green bar, right? Dotted price is right here. Price going up is this way. Do we have increasing interest to the green bar? What does that mean? You know the saying like in those commercials back in the day, I think it was like Verizon, is like Verizon raising the bar where you would have a bar here. It was like some cellular, but you essentially want to see it like this. Okay, this is increasing interest. Okay, that's what you want it to look like for flow number one. And let's say the green bar is, right here. Okay, now sometimes there's only going to be one bar. So in this case scenario, it looks something more like this, where it's this and then green bar right here, right? So we're right here. We have this bar, right? And then we have it increases to this green bar, right? The green bar is taller. So yes, we have increasing interest. We're below the green bar, and we have increasing interest to the green bar. Okay. So next thing is now you basically know that there are incentives for market makers to push price to the green bar, which is 570. So we want to take any pullbacks until we get to that target. Okay. We know that there's incentive for market makers to get to 570. They're going to make more money. They're going to be neutral. Their jobs are going to be better if we get to 570. We can line this up with the institutional flow. The second one, it lines up. There's a big drop off afterwards. We can also line this up with time pressure, the time decay flow, right? And we can also see it lines up with 570. Everything's lined up. It's all good. Market opens up. Okay, let's take any pullbacks to 570. Okay, so we can see what the chart looked like. Actually, when market opened, we opened up like right here towards just under 569. This is 568. And then we have this green line is 570, this green bar, right? So really any pullbacks to 570, whether you got in here, you have your stop below the level, below the lows, right? Same stop loss system I always use. It's just below the pullback low. Any pullbacks are getting bought up. Any pullbacks are getting bought up until we start consolidating around this green line. Now, again, just because the bar was green, right? This bar was green. It doesn't mean we're going to stay at this level forever. We could get to 71. We could get to 72. We have some interest down here. I know for sure we're not getting up here. We're not getting to 580. I know that for sure. There's no interest, but we have some interest right here and some here. It is decreasing, so it's less likely. From 570 to 571, it's a pretty big drop off, right? So I'm less confident to hold this to 571. Maybe I can hold a runner if I really wanted to. I'm less confident to hold it. But I know for sure we want to get to 570, right? And you can see as soon as we got to 570 once, right, immediately pulled back, got around to this level again. And then that's the day, right? So this would have been the best trade of the day, the highest probability trade of the day is us getting to that green bar. From here, market kind of just consolidated around our zone and didn't really do too much else the rest of the day, right? So again, this looks like a really small move. Keep in mind, this is like an 80-point move between these two zones. So this is a good trade opportunity on NASDAQ. 80 points can get you a nice payday, right? Now, I'm going to go straight into setup number two. Do you guys have questions on this? Now, keep in mind, we're going to go over more examples in just after we go over the 5 setups. Okay, so we will do more examples after the 5 setups, but I want to go through the setups real quick. So if you guys have any questions, let me know. Let's work going into London and or Tokyo. Not really, because most of the flow data looks at 0TT options, and there's no options open during London and Tokyo. wholly following this. How do you apply it to futures though? Oh yeah. So if we're 568 on QQQ and you know like this is a key pullback level and target's 570, I literally just go to TradingView and there's free price converting indicators. So for example, there's one called map multiple QQ levels to NQ. I can just put in the levels. So if I want to see where 610 is, right, I can put in the level. Okay, and it works better on regular candlesticks, but you can see during market day, um, it'll show exactly where that level is. Okay, when the market closes, it gets all crazy, but it works best when the market's open, obviously. So we can see 612 would have been this yellow line, 610 would have been this blue line, and we can just trade the NASDAQ chart. So it's super easy. Yeah, you can trade QQQ directly too. It doesn't matter. How soon does this data show up? It's 1 minute after market open. How do you identify the levels? Well, that's what we're explaining right now. So when we went over this, we saw the bars, right? The green bar was 570. It's hard to see, but it shows right here. And we saw increasing interest to 570. So we want to take any pullbacks as long as we hold that first negative bar, any pullbacks in between. So this would be like our range between 68 and 70 would be our range, that first negative bar and that green bar. If we have increasing interest, so you can see this bar goes from negative, it goes up, and then it goes up, it peaks out. I don't know if it's going to keep going up, okay, because it drops off so much, but I know it's going to go to the peak, right, as it rises, where it's rising, so it's going to go to the peak. So these bars are how we're finding our levels. Each bar is a different level on QQQ, and we convert the QQQ prices over to NQ, or if you trade QQQ, you can just trade the QQQ levels. Why are you so sure someone won't come in at 572, 573? Because of how much of a drop, there's less interest, right? Look how much the bar drops from 570 to 571, 572, it decreases, right? So I'm not as sure because it's lower probability. Think of this in probabilities. We have a super high probability we're going to 570. Super high probability because it's the biggest bar on the chart. That gives us the 80% edge. These bars are a lot smaller compared to that green bar. I want to take the one that has the highest probability of working. Okay, so I'm going to keep moving on and hopefully I can get to more questions. Does this also mean 570 could be a potential resistance? Yeah, so 570 could be a potential resistance. The bigger the drop off, the more likely it is to pull back off of 570. And even this had a pretty big drop off. So like you can see it did pull back off of it. But it doesn't mean it's going to completely reversal. It's not a reversal level. It's a target. If there's a drop off at 571, we're probably going to pull back as soon as we get to it. You can see it'll work to the T, right? It'll pull back. It'll go exactly to the level, then it'll pull back off of it since we had a big drop off. But then price tends to come back up. So think of the green bar as like a magnet for price. It goes above it, it pulls back to it, goes below it, it pulls back to it, goes below it, pulls back to it, right? That's kind of what you want to think of it. All right, going to keep going through. Selling flow, setup number 2. This is a close below a big negative bar with a peak below it. Okay, so now we're going into the negative territory. All right, first negative big bar. or I'm sorry, close below big negative bar with a peak below it, red bar far away, or break of red bar, target, next target, bar peak. All right, so that probably made no sense to you guys, but we're going to explain this. So close below a big negative bar with some kind of peak below it, or red bar far away, or break a red bar. Yeah, so let me explain this. We'll have more examples. So as you can see, we enter the dotted line is where price is, right? Remember, dotted line. So we broke below 574. This is the red bar. 574 is the red bar. We broke below. So the red bar is just the biggest bar on the negative side. The green bar is just the biggest bar on the positive side, in case you guys are wondering. Anyways, we broke below the biggest bar on the negative side, and we have some interest below it, right? We got this bar peeking out. It's just kind of standing there. We got these bars with some interest, right? So same thing on the flip side, just like, you know, if we so negative, it's a little bit different. Okay. So when we drop to negative, it's a whole different story. This is where the market gets super volatile and it starts turning into that elevator down versus stairs up type price action where as soon as we break below, the dealers just unload all their positions, start selling like crazy. Everyone follows, and it just turns into a huge sell off, right? And we'll dip straight into these next levels. So as soon as we break below the level, I'm looking for a retest of that red bar. Okay, so this would be 574. Now you don't have to, a retest is optional because sometimes it can be so volatile where we just go straight down. I like trading the retest, even if it's just one little 1 minute candle. Um, but if you're more of like a breakout trader, this would be a great setup for you, a perfect setup for you, because this is the breakout. It's a breakdown. So as soon as we break the a big red bar, right? And I'll show you more flow two examples. But as soon as we break the big red bar, the big red bar, and we have pretty decent interest below it, right? Meaning the size of the bars is what I mean when I say interest. Then we're gonna see it, right? So if we break 574, we're for sure going to 573, and we can even get to 570. Okay, so market makers, let's say price opened up right here. Okay, if if price opened up right here, they're always going to try to defend this first level because the market makers do not want price to go negative in negative territory because it makes their job harder and the market gets crazy and it's harder for them to be more risk neutral essentially. But if we do, they have to follow the market. So if we do break 574, they have to follow the market and it creates all kinds of momentum straight to the next bar. As you can see, there's a huge drop off after this. So this would be my first target is 573, knowing that we could get to 570 though, right? So maybe leave a runner to 570, but the first target would be 573. Remember this red bar is 574, okay? So let's look at what happened on this chart. As you can see, we have the green bar up here at 577. Market open up. We immediately sold off to the red bar. Now remember, the first negative bar will always get defended, and that's going to be one of our setups. It's flow setup number 5. The first negative bar will always get defended. If it can't hold, right, and it breaks, as you can see, it ended up breaking right here, kind of faked out right here, went up, could have caught a trade in here, right? Because remember, this will be a setup we'll talk about, right? That first negative bar. What I mean by the first negative bar is the bar, obviously that goes negative first. That points down first. That will always try to be defended. If they can't hold it and we break below it, price will dump to the next bar with some interest. So in this case, it's going to be 573 and then 570. Okay. So as you can see, we break below it. We can't hold it anymore. We end up retesting the level. Okay, you wait for some confirmation, get in, and you can take it down to 572. I think I said, yeah, I think I was saying 73, but I meant 72. It's going to be this bar right here. So we got 74, 73. Yeah, so 572 will be that first target because we have a drop off after this. And then that next peak is 570. You can hold a runner to there maybe, right? So as we can see, go straight down to 572. That's the initial target. We end up retesting 72, and then we eventually drop to 70, which is way down here later in the day. Right? And that's what the market looks like. And you can see as soon as we break into negative territory, that's where it gets, pretty volatile and we start just flushing straight down. Right? And these are the most fun types of trades to take because they work out super quickly and they're easy trades. Okay? Can you explain a bit more what you said about watching higher highs, higher lows, etc. on the 5 minute? Yeah, I was just talking about like we kind of we went over that in the flow setup number one, where we went over just any pullbacks until we get to the target. Right. So I was just saying like sometimes we chop around a little bit before we get to the target, right? But typically all the pullbacks will get bought up, especially on a 5 minute time frame is kind of what I was saying. Okay, why not also sell at 577? So this is, yeah, 577 was the green bar. Because we don't want to sell at 577 because this acts as a magnet, right? Price tends to want to stick around here. So you don't want to, now there are exceptions, which I'll go into. That's actually the next setup. We can sell the green bar sometimes. Okay. So we'll go over that. That's actually the next setup. Now, you want to do what's most likely to work. Okay. So this is this is kind of how I create these setups. Is what is most likely to work, right? So let me get into flow step number 3, and I think that'll answer your question more. Okay. These gamma levels are consistent with the bull market. For a bear market, when the green gamma bars sit to the left, with the red volatility bars be to the right. Red volatility bars be to the right. No, it's always like this. It's always the negative is on the left, at least for the way we set it up on this software. Other softwares, it might get a little confusing where they're kind of all over the place. So I'll go over which setups are the most common. We'll have the best win rate after we get through all 5 of them, okay? So let's keep moving. Step number 3, no more buyers. So short at last relevant positive bar with fading interest. Target can be VWAP or support. So this is a short trade, another short trade. Okay. Remember, we went over selling flow, buying flow. So that's buying with the market to the target, selling with the market to the target once we break that negative bar. Now, at a certain point, there's going to be no more buyers, right? So these setups all work together. I can look at one chart, right? And I can name all the setups. I can say, okay, well, there's not really a setup 1 here, but maybe setup 1 is right here. Setup number 2 is right here. Setup number 3 is right here, right? This is why we have it the way we have it. We can look at a chart and we can see all the setups on the bars. Okay, so setup number 3, no more buyers. So essentially how this works is you want to short the last relevant positive bar and making sure we have fading interest under that. So last relevant positive bar is this one right here. You can also argue this one, but you can see the drop off is pretty significant after this green bar, right? You can also see, going back to what I said before, with fading interest, this is very important. Okay, you do not want to see something like this. Let's say it looked like this, where this bar was like this. Okay, this is not fading interest. Okay, so in this case, I do not want to short at this bar because we could get to this peak, right? We have some interest up here. Now, since it completely fades, it literally fades to zero, we have a huge drop off from, this is 583 to 584, right? This is a pretty comfortable bar where, there could be no more buyers, right? We can also confirm this with institutional flow. Okay, looks the same. The charm peaks at 584, 585. So charm is telling me this could go to 585. But most of it is telling us, 583 is going to be the top of the market. So we look at what happened to price action this day. As you can see, 583 is this green line right here. We definitely chopped around here. So market opened up. We pulled up to the target, as we always do. And then we chop around for a bit. We end up selling. We end up retesting it. And then you essentially want to take the trade either back to VWAP, back to support. You can take it back to, you could take it back to, another bar. So maybe that next bar, you're like, okay, I think we can pull back to our first negative bar, this red bar right here, right? That could be a target. It just depends. Sometimes the green bar is super far away. So a VWAP is usually a safer option. But in this case, this trade is taken all the way back to that 580 mark. Okay, so this is just a simple, and this setup works best in the first 1 to 2 hours of market open. You really don't want to trade this if the market's been trending up all day and it's like the last hour of the market open. You're like, okay, we're at like the top of the market, the last relevant bar. This works best when it's like, okay, the market's only been open for a few hours. We have no more interest below. It's completely fading. Maybe you can also say, oh, we do have some resistance there back a week ago. Okay, that gives you pretty clear confirmation that it's one of those days where we go up a little bit and then we end up selling off, right? So, anyways, that is step number 3. Step number 4 is the same thing, but just on the flip side. It's no more sellers. Okay, so this means you long out at red or last relevant negative bar with fading interest below it. Target, VWAP, or biggest bar. Same thing, but on the flip side. Okay, so now we're going long. We're looking at, all right, 560, 561, somewhere in this range could be the bottom of the market. We don't have any interest below it. And we're probably going to pull back up to the next bar that peaks, and we have a big drop off, as you can see. It's this bar right here, so that would be 61, 62, 63. So you can long a 560 to 563, can confirm that with the delta. Oh, look at charm, it increases perfectly to 563. That's a perfect, like, raising the bar example. Increases perfectly at 563. That would be my target. Okay, so let's see what the chart did this day. And we actually went up to 65. Wow. So pull back straight to 560. This is like straight on market open. So it's not like this was even later in the day. This is within the first few minutes of the market open. As you can see, we get confirmation. And then we pull up actually to 65. 63 would have been a decent target, but the risk reward wasn't that good there. But keep in mind the Greeks do change a little bit as the market opens. Usually like the first 10 minutes of market opens. The flow bars change, then they tend to stay the same the rest of the day. So anyways, Yeah, so 565 would have been right here, that next peak. This would have been my like take profit area. Then this is that next peak, 565. Then from there, it's like dead. So I would definitely take profits fully at 565. You can see we went exactly there. And this could have been another short opportunity, right? Because we go back to 65. It's kind of similar to flow setup number 2. We're in this negative territory. Everything's negative. There's no buyers on the institutional flow. We pull back to that last bar. Essentially treat it as a retest, right? We're retesting that 65. We're going to bounce straight off of it. So that could have been another setup you could have taken, right? But the whole point is to show you the levels and how too much of a how much of a T they work to, right? It's exactly to the level 80% of the time. So anyways, setup number 5, then we'll get into some more stuff, pull this all together. So those charts don't change. They're set pre-market, is that correct? These charts, these flow bars, they will change. So we don't get access to the data until 9:31 Eastern time. Okay, when the market opens after 1 minute, because it factors in 0 DTEs. Okay, so the first minute everyone's selling their contracts because their contracts expire that day. So it pulls in that data. They tend to change around the first 5 minutes a little bit, and then it tends to stay the same the rest of the day after those 5 or 10 minutes. They might change a little bit if we have drastic moves in the market, but they'll tend to stay the same after the first 5 or 10 minutes of market open. Okay, so let's go on to. All right, so this is the most common setup. Want to make sure we go over this. This is the trade I take the most. Step number 5, defensive longs. Okay, so this is where market makers are defending price action. They do not want it to go below this price, below this level. So in this case, we open below the green bar with mixed interest to it. This doesn't matter as much, this mixed interest. But a lot of times we will have mixed interest, which means you can't take flow number 1 because flow number 1, you want increasing interest. Mixed interest means something like this. Let's say we have the green bar right here. I'm going to make it tall. And then we have a small bar. Then we have a big bar. This is mixed, okay? And then we have, let's say, this negative bar. Okay. So this is what I mean by mixed interest. It's not consistent. Increasing interest would look like this, where it's increasing. All right, so just so you guys understand my terminology. So anyways, we see a situation like this. What happens is we pull back to the first negative bar or red bar if right below. Target first positive bar. Okay, so this is a defense of market makers not wanting us to go into negative territory because otherwise the market gets volatile, the market gets crazy. It makes it harder for them to stay delta neutral, and they want to defend that level. Plus, they get a really good deal on their hedging positions, right? If they can buy near the low, this is typically like the low of the day. Market opens up, we pull back, we rip up from there, consolidate. Maybe we pull back again or we keep ripping up the rest of the day. But so they have a lot of incentive to defend this price area, which is why it's a very common setup and it's a solid setup, right? So anyways, kind of looks like this where market opens up. Let's say we're right here, and then we have a little bit of mixed interest. So I can't really take flow sub number 1 because it doesn't increase. It like goes down, then it's up, then it goes down, then it goes straight up, right? It's a little confusing. So in this case, we would wait for a pullback to that first negative bar, which is right here. Okay. And then we also have a red bar supporting it, right? And if we remember the last setup we just went over, this is also flow setup number 4. So a lot of times, and this is the best setup, I've yet to seen this type of trade not work, is where we have setup number 4 right here, and then setup number 5. Okay, so if you remember what we just went over, flow setup number 4 is no more sellers. Okay, so that means after 4, there's a huge drop off and it dies to 0. There's no more sellers, right? Plus, we also have flow setup number 5, where the first negative bar is going to get defended because they don't want us to go negative, right? So we have, so what is this, 575 and 576? These levels will for sure get defended, okay? Like there's a 80% chance just looking at this. So we can go into this and we can see, I don't even think we pulled back to, where did we pull back to? I'm sorry, I'm reading this wrong way. This is 576 and 575. I don't know why I've read that. So first negative bar, 76, and then 575. Okay. Flow setup number 5 is 576. Flow setup number 4 is 575. Okay, does that make sense? Because remember, this is the first, just pay attention to this middle line. Pull back to first negative bar or red bar if right below. So this basically means we can either pull back to that first negative bar or the red bar, which would also be flow setup number 4, which is no more sellers, right? So it's the last relevant negative bar, and we can long there. Okay. So with this, as you can see, 575, that is the last relevant negative bar, and that's flow sub number 4. But right now we're talking about flow sub number 5, where it's the first negative bar that likes to get defended, and it gives us more confirmation that the red bar plus declining interest, flow sub number 4, is right behind it. It gives us a really good setup that this will get defended, and then our target will be the first positive bar. Okay, so this would be 76, 77, 78. Okay, so remember, first positive bar is the target. Okay, so if we look at the chart, we pull back exactly to 76. Okay, we went a little bit below, but this is a 1 minute time frame I'm showing these charts on, by the way. Always a 1 minute time frame. Get some green candles, get some confirmation, and then we take it up to that first positive bar at 78. As you can see, this trade didn't quite get to 78 actually. It got just below it. So, typically it just depends. Either way, you would have got a nice 2-to-1 trade. But I always take some profits along the way, especially if we see some intraday resistance and stuff like that. You can start taking some profits there. Most of the time it will get to the level. Sometimes it will fall a little bit short. But you can see this scenario, this is where you can start, this is where you start putting your knowledge all together, and you can see like, oh, we don't have increasing interest to 78. Or I'm sorry, that's not 78. This is 77. Okay, so this is kind of where we stalled out. We almost got to 78 and then we pulled back again to the negative. So you can see we have a very small bar at 77. I mean, you can't even see it, right? You see how small it is right here? This little thing, that little blue piece. Typically when we see something like that, it just means we'll have a little bit more consolidation. So this is where, you start getting familiar with the stuff, and, this is a lot of information at first, but, imagine if you guys, work with this for like a month or two, right? You guys will really start to understand, and, it seems like a lot of moving pieces, but we can go to the setup right now. We can be like, okay, this is setup number 3. This is setup number 4. This is setup number 5. We don't have a setup number 1 because there's no increasing interest. Maybe this is setup number 2 if these bars start growing down here. So eventually this will all click together, right? I'm giving a lot of information right now, but eventually you'll be able to look at a chart and you'll just be like, oh, okay, setup number 2 is right there. If we break 575, if we hold 76, I can get long there, right? And it becomes super easy. Okay. And then you can start looking at other stuff like that. We're like, oh, we have a pretty small bar right here. Maybe I'll take some profits because it might be more consolidated market, stuff like that. By the way, would have been a solid trade. So, anyways, that is setup number 5. Now, like I said, eventually you want to go into this and you want to be able to look at a chart and be like, oh, okay, sub number 1 is right here. We have increasing interest to the green bar. If we pull back to 71, we have flow sub number 5 with a red bar right behind it. It gives me more confirmation. Now, can anyone tell me why is this bar, this red bar, not flow setup number 4? Okay, why is 4 not right here? Why is it way down here? Okay, because this is where it can get a little tricky, right? It doesn't just die off. More interest in negative. Yeah, so you guys got it. Like there's still, it's not the last relevant bar. Even though this is the biggest bar, right? These bars are still relevant. Okay, so this is why like after this, the bars aren't really relevant. They kind of all die out. So you guys get it. You guys understand. But eventually you'll be able to come into this chart and you'll be able to see, okay, I see 5 trade opportunities right here. Now, sometimes there'll only be a few trade opportunities. But again, this is just one day, right? These bars, they change every day. It doesn't stay the same for a week. So you'll be able to get a trade every day, right? So anyways, I want to go into the actual data for these setups the past few months, and I have each one dated with the exact image and the chart image, right? So I don't want to go into all of these, but I just kind of want to show you guys some of the results over the past month, 2 months, almost 2 months or so. But you can see it's mainly green. A lot of these that do get stopped out, like let's say this one. It's mainly because of just mistimed entries. So like, sometimes a stupid image loader doesn't load, but hopefully I can pull some of them up. Usually when we do take losses, it's because, or let's talk from me. Usually when I take losses, it's me just not following the strategy well, being dumb, making mistakes, reading it. Or number 2 is just mistiming the entries. So for example, let's say I enter the trade right here. I think 69 and 70 are going to get defended. As you can see, these are my first 2 red levels. These are the first negative bar. So this is flow sub number 5 and flow sub number 4, right? I think these are going to get defended. I get long right here. Price ends up pulling back a little bit more, stops me out, and then I get back in and then I take it back to the target. So I still make some money that day, but it doesn't mean I don't take a loss, right? Even though 80% of days I know what price is going to do, doesn't mean you'll never take losses, okay? So I really want to stress this is not a perfect system because no such thing exists, but you guys can see how you understand why the market's doing what it's doing, right? You're not just lost staring, trying to find a pattern or blindly following an indicator that you don't even understand how it's coded or how it works, right? So anyways, just want to explain that real quick. But yeah, we can see with this chart, I'm sorry, this image uploader sucks. And for some reason, it never loads my images right. But yeah, so this one's a little blurry. So this was basically this chart. So this is what it looked like. So as you can see, if you guys try to work with me here, we have flow setup number 5 right here. It's the first negative bar. We have flow setup number 4 down here. It looks like, yeah, the red bar is actually at 68. Okay, so it was at 68. And then you can see there's a pretty big drop off, so that could have been like a partial setup 4, Not really though, because we have some interest down here. And then no setup number one, because the first positive bar is green. So obviously this would be the target. And then, or even this could be the target as well, because it's pretty equal. And then we have like flow setup number 3 right here, where there's no more buyers after this. So, oh, now it loads. Anyways, yeah, so in this case, between 570 and 68 would be our defensive area. And then the target would be 71, 72 for sure. And that would be like the trade. If somehow we dip, or if we do break 78, flow sub number 2 will be right here. Is that a 2? Okay, that's my 2. So if we break under 68, we can take it for sure to 66, maybe 65, and then 65, we have flow sub number 4. So you can kind of put all that together and kind of just see what the market looks like. Came down, eventually tested 69. I try to get long at 70, which is the first negative bar. We pull back to 69, and then we come up to 71, eventually 72. 72 is right here. Okay. And this is, yeah, 72 is basically another green bar. It's pretty much equal. So that also could have been a target, especially if you took that first loss. You might want to hold a runner to the next target, which eventually would have hit down here. But you can see once we're in positive gamma, right? It's very steady price action. The market opens usually a little crazy at first, but it's very steady price action where we just continue making higher highs and higher lows. And maybe pull back to the green bar again, or maybe the interest changes throughout the day, and maybe sometimes, maybe 575 starts growing, and this will happen sometimes where 575 starts being the new green bar, and now you have a new setup number 1. You can start taking the pullbacks into 575, right? I'm not saying that happened this day, but that will happen some days. So anyways, I'm going to share this with you guys and you guys can look through it. Or we can go, I'm just hoping these load. Oh, this one loaded. Nice. Okay, so this is August 20th, flow number 2. And then we have the chart image. So we have, I should have hid the flow so I can test you guys. But anyways, we have 70, 69, so 68. If we break 68, 68 will try to get defended. So this is flow setup number 5. And then we have 2 right here. Okay, and then we have like 3. Then we have, yeah, kind of 4 right here, but more so down here or even right here. But as I said, if we make a big move, like this is like a 5-point move, which is like 200 points on NASDAQ, these bars will change around. So you'd have to find the updated, what the bars look like. But again, they only change around a lot if we do have a big move. Okay. This is 8 minutes into market open. So anyways, 8 minutes into market open, this is kind of what we're seeing. We could get defended at 68, this red bar. If we break 68, we're for sure going to 65. That's what I'm seeing right here. Can we all agree on this? Does this make sense? Okay, we can also see the institutional flow lines up with that. And we also have the charm or time pressure peaking at 565, lines up with our target. All right, so as you can see, markets opened up. Remember, we could get defended at 68 because it's our first negative bar, this red bar. It could get defended here, right? But as you can see, it never did. Market opened up, we pull straight down. We get a little retest, we get some consolidation. Gives us a place to put our stop loss above these consolidation highs. Enter on a candle, on a red candle that breaks these lows. And then boom, we take it straight to 65. Now, this market got crazy where we actually sold off like 300 or 400 points to stay on NASDAQ. So we made like a 10-point move. That's a 400-point NASDAQ move, right? This is what happens when we enter negative territory. The market gets crazy, right? So we actually pull back all the way to 60 way down here. That's insane. But yeah. And then 60 probably would have been setup number 4. I can't really see what happened down there. But yeah, as you can see, we end up bouncing off of that. So this is an example where you could have took a loss here. Let's say you took this trade and you're like, okay, 560 looks like setup number 4 where there's no more sellers. I get long right here, put my stop on the lows. I get stopped out, right? So notice how you will lose. Even though you know what price is doing, you will lose trades. But it's okay. We get back in, we take it back up, we make back this little loss and this big move up. Okay, so you just got to stay consistent with it and trust the process and give yourself an opportunity to take a loss. Someone told me sells happen more often. Is that true? No. The market has consistently gone up over the past 120 years or however long the market's been open. It's always gone up. If selling happens, it happens fast. Or selling days, I should say, it happens fast. But market mainly goes up, right? We've been in an uptrend forever. Like, yeah, if you look at a weekly time frame, we've been going up. Okay, so can you explain how you got those levels again on your chart? Yeah, so all right, someone's drawing on my screen. So hold up. So how do I get these levels on my screen? We have 68 as our first defensive area. It's the first negative bar. Okay, this is setup number 5. Right, remember, so always try to get defended the first negative bar. If we break 68, we have setup number 2 going straight to the next peak. Okay, so we're going to dip down to the next peak, the 565. Right, so that's how I got my level, 68, 65. Okay, so I'm going to share this with you guys in case you guys want to just check this out and, kind of check this out for yourself. I don't think I have too much time to go into more of this. So we will be going into it. Or I'll let you guys go into it at your own pace if you want to later tonight. So anyways, as you can see, it's really the win rate's really well. You can see the days we do lose money. We can take another trade and make it back. So like you can see we had a loss September 4th. We make it back September 4th, right, with 50 points. We have a loss on September 9th. We can take another trade and make an 80-point trade. So it's still green. Most of these days are still actually green days. And keep in mind, this is if you follow the system perfectly. I don't always follow the system perfectly. I make mistakes all the time. So this is if you follow the strategy perfectly is kind of what I'm trying to say, right? But it has a very high win rate. Even if you mess it up, you can easily get a 60% winning days still, right? So most of these trades you can get a 1.5 R. Now with a 1.5 R, it basically means if you're risking 100, you're making 150. If you're risking 1,000, you're making 1,500. So, I mean, a few weeks ago, I took a 4R trade. Sometimes it's a 1R, but typically the average is like a 1.5, right? So that's kind of what I try to aim for. Now with a 1.5, you can break even at 40%. So if you guys are losing money, then that means you're trading at somewhere in this range. Okay, if you're an unprofitable trader. Okay, and if you have a strategy like this, and man, if you know what the market's going to do, You know where it's gonna, you know where the target is, you know where it's gonna get defended, you know where it's gonna accelerate if price breaks through, right? You guys were already naming some of the setups. There's no reason we should be in this territory unless you have that bad psychology and you take dumb trades. You take a loss and you get right back in. I do that still. Okay, you guys have seen me do that. Um, that's where this comes from, right? So if you have the good strategy and you have the good psychology, you have the community, right? This is where you can start getting into this territory with that 1.5 R, right? This is all profitable. I mean, we're talking a 50% win rate. I think anyone in here with a decent IQ who understood what I talked about today could get a 60% win rate. Okay, I'm not saying by tomorrow, but if you guys stick with what I shared, the strategy I just showed, you're not hopping around, right? You can get a 60% win rate. There's no reason you can't. You just have to stick to your plan, right? Like I said, a lot of these trades where, let's say September 16th, okay? Look at this. I took a loss here because I thought, what is this level? I thought 591 would get defended. Took a trade here. Thought it'd get defended. Man, I still think this will get defended, and you have to be careful here sometimes. But as you can see, like I made all my money back, right? We had a huge trade after that. So I hate when this happens. Like this is a frustrating day. Obviously, this doesn't happen every day, but some of these days will happen. I'm being real with you guys that some days the market just wants to chop around and chop you out and just fuck everyone, right? Some days the market will want to do that, but you got to stay consistent, right, with the strategy. And you should have a trade rule. Maybe your max trade rule is 3 trades. Don't take any more than 3 trades, right? Whatever that is for you. Everyone's going to be a little bit different on that, but that's the goal. 60% win rate, the 1.5R, you're going to be very profitable. You're going to be far from break even. And most importantly, you're not going to be losing money, right? You're going to be making progress on your account, on your accounts, right? So, right, to give you guys numbers, if you guys are new to like futures trading and NASDAQ and stuff, this is kind of the data for if you're risking 20 points, making 30 points, that's a 1.5 R with a 60% win rate. Let's say you're taking 1 trade per day, 5 trades per week, right? These are kind of the numbers you can expect. A 1 contract is 4,300 a month. So it's not crazy numbers. This is 1 mini, by the way. 2 minis, 8,600 a month, right? You get into the 2 mini territory, you only need a $10,000, $15,000, $20,000 account to trade 2 minis, right? This pays your bills. Okay, that's 8,600 a month. Obviously, it can scale from there. You guys know how trading works. That's why you guys are in this business, right? You know how scalable it is once you get it right. Obviously, you start getting into the 70% win rate territory, the numbers start going up even more. So that's the cool part about trading is obviously it's very scalable once you get these numbers and you're confident and you're comfortable to start scaling your size. So now my question is, we kind of went through everything. I gave you guys examples. Hopefully answered some questions. Do you guys think you can do this? Okay, we'll get into some more questions after this. I just want to finish this through real quick. Absolutely, I was trading blind before. All right, seeing lots of yeses. Absolutely. Do these bars change intraday a lot? Like I said, they'll change around a little bit the first 5 or 10 minutes, and then they'll tend to stay the same unless we get a huge move in the market, like from news or something. Then they'll tend to shift around a little bit, like interest will grow on one side. Cool. So it's saying yes, yes, yes. Can you explain sub number 6 again? There's only 5. I don't know where you got 6. Yes, with repetition. All right, so a lot of you guys are asking, Chad, where do you read these market flows? Where do you read them? So like I said before earlier on this call, for years, only Wall Street saw this flow data. Only recently did this institutional data become available to the public. This is a real fact. If you don't know, like a lot of these calculations to get these flow data, like big institutions that use this data, they spend millions of dollars per year on this software to basically generate calculations to create this flow data. Again, they're obviously not looking at candlestick charts, and they're not even traders, but they're doing it so they can stay delta neutral in the market, right? They need tools like these so they can hedge, right? And this is kind of why none of this stuff is popular in the actual trading space. But obviously, through technology, through innovation, retail traders are starting to get more tools, right? And we're starting to get the same tools that Wall Street has had for years, right? Before, we had to call Wall Street just to place a trade. If you guys have ever watched old trading movies, that's how you traded before. You had to call them. You had to call the broker. They had to place the trades manually. Then we got access to our own brokerages, our own charts, our own this. And now we have flow data. Okay. So there's only a few companies that offer this flow data. Keep in mind, almost none of them factor in zero DTE expirations, which is crucial if you're an intraday trader, aka a day trader. So there's a lot of companies like Gex. They have this data, and you can use it, and it'll work. It'll be like 60 to 80% the same, but again, it doesn't calculate zero TTE expirations. Okay, which is a big factor. If you guys wonder why, when the market opens and it starts going like this, you guys know how volatile the market is when it opens. The reason it does that is because everyone's closing out their zero DTE. They're like, oh, my contracts expire today. I don't want to lose a bunch of money on my contracts if I hold it for the next 10, 20 minutes, right? I'm going to close it out. I'm already up over 100% on this position. Oh, I'm already down 100% on this position. I'm going to close it out. And this is why the market moves like a crazy man when it first opens, that first few minutes, right? It's because of those zero DTE options. So the Greeks, so most companies don't factor in. So this is why I only use specific market data to get this flow data. And like I said, it works better for intraday trading. Next thing is a lot of the other companies we'll see that offer this flow data, they're all very confusing for beginners and offer no training. They offer no strategies to work with. They kind of just give you the data, expect you to figure out, even though there's no tutorials or anything like that on them. So that is why I recently partnered with a leading market data provider and their team to make this possible using flow data for retail day traders, right? So we factor in the zero TTE calculations, and we also give you strategies like you saw today and actually help you trade with it, unlike any of the other companies. So today I will be launching MarketFlow for anyone who is interested in getting access to this data. This is my new software, and obviously this is the name MarketFlow. So this is the tools that's been hidden from retail for years. It's now yours. You'll get the delta hedging, time pressure, institutional flow. We have heat map indicators showing the ratio between calls and puts, all that good stuff inside of our platform. So to kind of go over what's actually in it for those of you that are interested. But anyways, first thing is the delta hedging levels. So you're going to see where dealers are forced to hedge or defend or release price, letting you spot targets, acceleration, consolidation levels. Obviously, you guys saw me explain the delta hedging. This is where we find the setups. So that's the first thing you get access to with the market flow, delta hedging levels, those bar charts essentially. Like I said, they pretty much update every minute throughout the day, but they do they don't change most of the day. They tend to stay the same after the first 10 minutes, but they do update every minute. So it's real-time market data that updates every minute on our platform. Next thing is the institutional flow. Track the net positioning of big players so you know which direction has the real weight of institutions behind it, right? So this is that flow chart. So you also get the institutional flow bars inside of market flow. Number 3 is time pressure. You're going to watch how time decay flow shifts intraday, revealing when pressure builds or fades so you can anticipate reversals and momentum changes. So this is the flow chart. You guys saw us use this. Remember, institutional flow and time decay pressure is like confirmation for the delta hedging levels, where the delta hedging, we see the setups. Is this flow number 1? Where's flow setup number 2? Right? That's delta hedging. And these are confirmations. So get access to the 3 main things. This is mainly what I use. This is really all you need. But we also have a volume heat map indicator we created. So this is a real-time heat map of where institutions are buying, selling, or losing interest. So you can spot pressure zones, reversals, and shifts in market control. So you can just see, if buyers are dominating more, which is the blue, or if sellers are dominating more, which is the red. So it's just a more visual experience of the bars, essentially, right? And plus, you also get a chart. If you don't want to pay for TradingView, you can just log in and you get a real-time candlestick chart as well. So that's the volume heat map indicator you also get with MarketFlow. The next thing, which no other Greek company offers, this is a training library and a community, right? Because this stuff is confusing. There's no tutorials on YouTube. There's some, but they're all like pretty long ago and it's very limited information. It's just not popular. Like none of your favorite trading influencers or the big trading influencers talk about Greeks or any of this stuff. So we're providing a trading library and community. As you guys know, I like to work with people. I like to help people out and honestly just build a team where we can all help each other out, really. But anyways, you get step-by-step lessons that break flows down for beginners and advanced traders. You're surrounding yourself with traders learning the flows together, asking questions, share setups, stay accountable, all that good stuff. Next thing is, well, actually, these are the main things. And then, yeah, so the full access for the software is $200 a month. I'm going to be changing the website, but right now it's otsflow.co. It'll eventually be called marketflow.co, but I'm waiting for the domain to get in my name. Anyways, that doesn't matter. But if you guys are interested in getting access to flow data and trading with us every single day inside the community, and getting access, to essentially everything, the delta hedging levels, institutional flow, the time decay, pressure exposed, all this real-time market data, the volume heat map indicator, training library, and community, like I said, it is going to be $200 per month, and you can just go over to otsflow.co. Once again, that's otsflow.co, not .com.co. Okay. Now, since I'm launching this for the first time, this is the first time it's ever being released. I want to get as many success stories, people, members in there loving it, testimonials as possible, right? Reviews, all that good stuff. So for those with me today, for one, I appreciate you guys being here. But what I'm also going to be doing is I'm going to be throwing in some massive free bonuses for anyone who joins today on this webinar. So bonus number 1 is you're going to get daily live trading with me. Okay, so you're going to get analysis of the flows, the Greeks. You're going to be able to see the exact trades I take, Q&A sessions. I trade live every single day on Zoom. You can see my screen and my trades in real time. Okay, like I said, I trade Monday through Friday from when the market opens to, typically the first 2 hours of market open. Sometimes most of the time we'll take a trade in that session. Sometimes I won't, but it just depends on the market that day. But I do go live every single day analyzing the market, where my key levels are, those setups, working with you guys with these flows, right? So this is $1,000 value. That's what I used to sell this for. Again, you guys get unlimited access to the live trading with me when you have an account with MarketFlow. So this will be completely free. So now you get the delta hedging levels, institutional flows, time to pressure exposed, volume heat map indicator, bonus number 1, daily live trading with me. Next bonus I'm offering is my OTS entry indicator. Okay, so this will print out buy and sell signals telling me when to enter the trade. Okay, so this is kind of what I use as confirmation to enter the trade. Again, I don't blindly follow these buy and sell signals. I trade it at my key levels with the flow setups, and this gives me confirmation for when to enter. So as soon as I get the buy signal, I enter the position. So this is a $500 value. This is what I used to sell OTS for. Again, this is included for free in your account with MarketFlow. So we get the bonus number 1, daily live trading. Bonus number 2 is the OTS entry indicator, and then all the MarketFlow tools on our platform as well. Bonus number 3, we're going to be doing weekly mentorship. Okay, so every single week we're going to be doing private live Zoom calls, reviewing trades for the week, and one-on-one Q&A. So what's different about these Zoom calls is you guys will actually be on the screen. You'll be able to talk to me, not just chat, but actually in person, or not in person, but you guys know what I mean. Face to face, you guys will be able to open up your mics and we can have just a real discussion or questions, and I'll be actually talking with you guys. Okay, so I think this will be super helpful for a lot of people that want to be more interactive with everything and not just like chat on a keyboard. So this is easily a $500 value. I'm going to be doing this every single week for anyone who is a member of MarketFlow. So it'll probably be every Friday. We may do them Saturday sometimes, but it's going to be either Friday or Saturday. It just depends on the week. But yeah, we'll be doing that. So that is bonus number 3. So with MarketFlow, especially for those of you who are live with me today, like I said, you'll get the delta hedging levels, institutional flows, time decay, pressure expose, volume heat map indicator. Bonus number 1, daily live trading, valued at $1,000. Bonus number 2, my OTS indicator, valued at $500. These are real prices I used to sell these products at. And bonus number 3 is the weekly mentorship, $500 value, where we will be able to actually speak on camera with each other. So with this is the full offer, full access to MarketFlow. Our platform is $200 per month plus $2,000 in bonus value. Like I said, if you guys are at all interested, just go over to otsflow.co, and I'll see you guys in there as soon as tomorrow morning. We'll be trading live inside the platform. As soon as you get in, we have onboarding training going over exactly how the platform looks. Essentially, you'll just be taken to this page right here. Okay, you'll watch the onboarding video. Okay, we'll go over everything in here. And then from there, you can set up your Discord account. You'll get access to our private Discord channels. We have the live trading sessions every day. Then you can open the indicator up and you can see all the data here. You can change this however you want. So for example, if you want to make this a little bit bigger, you can change it around. So the platform is super customizable to however you like it. Another cool thing that no other flow software or Greek software has is this replay section. So if you want to back test your trades, we can go back to September 24th, for example, and you can pick the exact time and you can see what the market flow looked like on September 24th. You can go to October 2nd. You can go to October 3rd, right? Again, I don't think any other flow software has this besides the one I'm partnered with. This is a huge part of this tool. And obviously it took a lot of money to be able to do this. So yeah, it is a premium product. Like I know that the $200 per month is a decent amount of money, right? I'm not disregarding that. But for everything we offer inside of here, like you're kind of joining a trading team. It's not just a tool where you get this data, but you also get the community, you get the live trading, you get the back testing, you get the weekly mentorship, all that stuff. So, think about how much money you've lost with trading over the years, or how much money you spent on prop firms and stuff like that, right? It's probably better to use that money for actual tools and education that will help you stay committed to a strategy and help you just trade better in general. So try to think of the cost as an investment, not as just like a dead cost of someone trying to charge $200 per month. Keep in mind, guys, this 200, every user on here will cost me $100 a month. So yes, I will make, you guys know me, I'm transparent. I will make $100 profit per user, but my cost is $100 per month. So I cannot charge even close to $100. And that's just my base cost. If I want to spend any money on marketing in the future, I have to take that out of my $100 I get per user. So I'm doing this as reasonable as I can at $200 per month. Like I said, every user costs me $100. So I'm throwing in bonuses to make this more valuable for you guys and make this a complete system, to make it so you never have to buy anything else ever again. And yeah, so anyways, guys, that is the price. If you guys are interested, just go over to otsflow.co. Once again, that's otsflow.co and take in your bonuses. So obviously, guys, best case, if you guys want to join this, you join, you learn the strategy, you trade live with me every day, you have your first profitable month, and you start scaling your size each month, scale your trading income. Congrats, you're finally profitable. All your hard work, research online, and staring at charts finally paid off, right? This is obviously the best case scenario. We've already had proof of people doing this, inside our Discord using the Greeks, sharing, no kidding, ever since I used Gamma, your boy on a roll, just crushed my third payout within 15 days. We have Cardona getting a $5,400 payout. So everyone who started using the Greeks, and I'm sure people in the live chat right now can attest to that they work really well, and they'll completely change the way you trade forever. So obviously, worst case scenario with this is you learn a whole new way of reading the markets and improve your trading knowledge and skill set in 30 days. And that's it, right? That's the worst case scenario is you spend the 200 to come with us and you learn a whole new way. You improve your trading knowledge, skill set in 30 days, right? That's the worst case scenario. So, anyways, guys, the choice is yours. If you guys want to join, like I said, you'll get access to the delta hedging levels, institutional flows indicator, the time decay pressure indicator, the volume heat map indicator. Bonus number 1, daily live trading with me. Bonus number 2, my OTS indicator. And bonus number 3 is that weekly mentorship face-to-face calls. So, anyways, guys, if you want access, like I said, $200 a month plus $2,000 in bonus value for completely free. Just go over to otsflow.co. So if you guys have any questions, now's the time. I'm going to be answering questions now, and we'll go from here. So, I'll put the link in the chat for anyone wanting to know where to go. Okay, so let's answer some questions. Let's see. This works for both NQ and ES. Yeah, so we'll have flow data on SPY and QQQ, which means you could trade NQ or ES. I mainly like trading QQQ and NQ, but it does have flow data for SPY as well. Okay, you can see we can come on here and you can pick SPY right here. Okay. Can I buy a year membership, Chad? It's listed as option. Yeah, it's listed, and the yearly plan will be cheaper as well. So we won't be trading live anymore in the Discord as usual. No, we will. I'll just be trading in the platform. So when you get in the platform, you see this little live button on the top right. Come on here, and you can just join me. There's going to be a little join button on your end. And then you can just join me through right here. So for anyone who gets in here, You'll be able to join the lives through this. If you're in the Discord, we will continue trading live in there as well. It'll just be streamed in both places. For already an OTS, already paid lifetime member, we already grafted into the service. No, what do you mean? This has nothing to do with OTS, but obviously if you have OTS, you'll continue getting OTS. Nothing changes there, and you'll continue trading live with me. Nothing changes there. Like I said, my cost is $100 per month per user. So obviously I can't give you free access to the software. That takes literally PhDs to build, engineers to build, coders to build. So can this also work with stocks and NASDAQ index? Anything related to QQQ? Yes. So if, you know, NASDAQ trades with QQQ, QQQ is a stock. So I don't trade, I wouldn't use this with like, if I'm trading Tesla. This works best with NASDAQ or SPY or anything related to that. So obviously like ES, NQ, stuff like that. When I get the bonuses automatically once I sign up. Yeah, so they'll be all kind of inside the platform and the Discord channels. If you watch that first onboarding video, it'll show you kind of how to get everything, how to get access to everything and set up. How long will the $200 be for joining? Also was a perk of joining now than later. It'll probably stay 200 for a while. It definitely won't go down in price. But then joining now, you'll get some of the bonuses, and then obviously you can get started. Why wait, right? Get started now. Start making some money trading. Start progressing. But if you want to wait, you can wait. It's up to you. Party and OTS. Okay, I'm not going to answer that. Any data on other commodities? No, we mainly just QQQ and SPY. I think that's where there's plenty of opportunity in those alone. So I personally want to stick to that and don't want to keep going with that. Yeah, so if you guys see on the website where it doesn't show the bonus for month one, that will be in the future, but for now, we just didn't update the website. It'll be in there. So it'll be locked in for that. So you guys will get it. It's already built in. So any plan, you guys will get everything if you sign up like today or tomorrow. We offer auto/copy trading if you're new at this. No, I have no interest in trading for you guys. The whole point of this is to give you the tools, the training, the support, and the community to become successful on your own. So I should move the chat over here because I'm looking over here. So anyways, I paid lifetime 1,000 for Zoom. Is that ending? No, guys. If you guys bought live trading with me in the past, nothing changes. I'll continue trading live with you. But the only difference is I'll also be trading live on this platform. It's the same stream. It'll be the same Zoom call. Everyone will just come in. But for people that don't have live trading with me currently and they want it, now they get it as a free bonus when they join MarketFlow and also get access to all these tools as well. Why do sometimes the levels from the trading plan differ from those used on the call? Yeah, it's because of zero TTE options. So the initial calculations is down here. This is like the normal Greeks you'll see on other softwares or just in general. So this is just using QQQ, looking at the Greeks. Now, this one uses quantum calculations, factoring in the 0 DTE options. So this is where it's a more intraday range. Okay, it's better for day trading, and like I said, it uses a certain calculation where if we explain this more, like we have a whole lesson on this when you do join, but anyways, it's better for intraday trading. So these are more like levels that, okay, this could be working for the day. This is kind of what the overall market looks like more. The market opens up. We get all that data flow coming in with people closing their positions that first minute, specifically for 0 DTEs, and then updates on here, right? Because these charts update every minute. So that's kind of that's why. And obviously I can't post that updated levels until the market opens. Um, so that's why it's different sometimes. Why do I need the software? I'm just if I'm watching you trade it live. I don't know. Don't you want to learn and have the own tools and not just rely on someone your whole life? I personally would rather have the tools and the live trading, but you don't. It's up to you, man. I'm not forcing you to do anything. Yeah, I don't know. I use Tradeovate platform, not TradingView. Will this pose any problems? Not with MarketFlow. That doesn't matter. But just for the OTS indicator, we do use TradingView for that since it's made on there. But everything else will be fine. That won't matter. Please explain the concept of defend in Greek bars. It just means like, let's say price pulls back to this bar right at 610. They're going to try to defend this, meaning like they're going to play defense, meaning they're going to try to push the price back up, right? They're going to try to get the ball on the other side of the court. That's what I mean by defense. Okay, let's see. How to use this for ES? It's no different. It's the same thing. It's just different numbers. Is there also a trial period? No trial period. This is the same as Quantico Cap. Yeah, we're using their same exact data. He just gave me an opportunity because he saw me kind of using Quantico and promoting it. He's like, Chad, let's just I want you to white label it and just kind of put your own brand on it. You can partner with us and you get access to the same data, same calculations, and then you can sell it for the same price, but you can tag on your bonuses. You can trade live with the members. So it made more sense to do it this way. So that's why. But yeah, it'll pretty much be the same, except instead of trading live with the Eric guy, you'll trade live with me. You'll get access to our community, all that good stuff. And not hear your answer for those paid for OTS signals. I already answered a million or at least twice already. If you guys bought OTS in the past, you still get access to OTS and you get to trade live with me every day. Nothing changes there. How long is the bonus stays for? I'm currently at work, can't purchase right now. It'll be available probably through this weekend, and then we'll close it out. And then it'll just be available on the 3-month plan. So people have to invest a little bit more to get access to them in the future. So guys, the website is just otsflow.co for those asking. otsflow.co. Okay, do we get access right away? Yeah, as soon as you pay, you'll get taken straight to this dashboard right here. And the first thing I would do is watch this onboarding video, and then you can immediately open your indicator. But watch this to kind of show you how to set everything up. How to use this for ES, the software give you an option for both. Yeah, same thing for ES. It's just different numbers on the screen, but all the setups, it's the exact same for ATS. You guys got to think of this. As market structure. Instead of thinking about a regular candlestick chart with, you're looking for higher lows, higher highs. That's market structure, right? This is market structure. If we break this level, that breaks market structure to the downside. We're going to go to the next significant bar level. Okay. Market structure to the upside tells us where price will peak. Okay. If we get above here, we'll probably consolidate. We could go into these areas. Right. This is simply just market structure. If I change this to SPY, it's no different. You're just reading the market structure on SPY. It's just different numbers. What broker do you recommend for NQ? I use Thinkorswim, but their fees are crazy. Yeah, I use Tradeovate for futures. Their fees are pretty low, especially if you trade minis. Yeah, Rob, it's a typo. It'll be included. The $200 per month will include the bonuses. That's just for the future. So any plan will include everything today. Any plan you guys pick. If the longest positive negative bars are identical for the day and price is now sitting in between the middle, does that mean the market can go either way as there's no strongest magnet? No, the strongest magnet will always be on the positive side. Market makers are always most comfortable with market going to the green positive bar. They don't want it to go into negative territory. Doesn't mean it can't, but more days than not, it'll stay around the green bar. That doesn't mean the market goes up like crazy because sometimes the green bar can be right above where price is and it just chops around. But it wants to stay positive. You always use the OTS as a confirmation of these setups? Yeah, pretty much. Please shows how it looks for SPY. Yeah, it's the same. It's just let's see if it's working right now. Yeah, so this is what it looks like. You just change the SPY and you can see it's pretty much the same thing. You can also zoom in this chart. So you can press this. You can have a more clear view. So you just change it right here. It's easy. The dotted line on the three charts is view up, correct? Oh, on this? No, no, no. That's where price currently is trading at. That's where price currently is. So as price moves throughout the day, right? Like this is where price closed today. This line will slowly move. And like I said, these charts update automatically every minute, so you'll slowly see the price, this little dotted line start moving across the bars. Yeah. Does this also come with the training view indicator that automatically draws the QQ lines on charts, keeping them updated in real time? Or do we have to manually enter those numbers? You have to manually do it. Yeah. It's not a big deal, but that wouldn't be possible to integrate those. Because like I said, the levels do change every day. So yeah, and then there is a built-in indicator. Like there's actually a lot of tools that I didn't even share in here. So if you want to add a tool, let's see. You can see, you just press this edit. So there's delta hedging, explosive sensitivity, institutional flow, IV exposure profile, time pressure, volatility impact, volatility boost. Like I said, I mainly just use delta hedging, institutional flow, and time pressure. And then there's like a candlestick chart, candlestick with momentum, hedge pressure, put call ratio, IV skew, max pain point, news, setup finder, trading plan, volume, IO ratio, volatility state, a few other ones down here. And then we have the price converter, if you guys want to convert the price. But like I said, I mainly use that trading view one just because it's already on my chart. But we do have a price converter on here and then trading plan history. So another thing, you can come on here, just look at news real quick. It's all built in. You can see what news is tomorrow. That kind of makes it easier. We have the trading plans up here now. It'll be in the Discord as well, but you'll also see a detailed trading plan with all the Greeks in here, exact setups you're looking for. Okay. And then what else? We got the community. Yeah, the back testing is like the big thing. And the live trading room. And that's about it. Yeah, I don't think I'm forgetting anything. If you speak Portuguese, you can change the language. But yeah, we can join tomorrow and still get all the bonuses, right? Yeah. Okay, let me try to get to these questions or get through everyone. I'm a little behind. I'm a lifetime member of OTS, so I can still access the live trading. Yeah. Yeah, that won't change. It'll still be where you normally get it now. Yeah, you'll keep the bonuses as long as you don't deactivate your account. I guess there's no another need for indicators on the chart, just resistance support lines. Yeah, pretty much. I mean, other than like if you use an oscillator for confirmation to enter a trade, or for me, I use my OTS indicator as confirmation to enter the trade. Because I don't like blindly buying at the levels. So I wait for price action to confirm a little bit and then I get in. So if you want to use an indicator for that, obviously you can. Does data also apply for Dow charts? Or are they unrelated? Not sure. That's a good question. You know, they trade similarly, but not always. Again, we only have data for QQQ and SPY, currently not the Dow. Um, like I said, there's plenty of trade opportunities just on NQ alone with this, so we're not too focused on it. But yeah, it's just QQQ and SPY. All right, let's see. Did I miss? questions? I don't think I missed anything. If I did, feel free to let me know. But it's getting pretty late, so I'll probably have to hop off here in a little bit. Um, but yeah, for anyone that did tune in late, I'll post a replay up. It'll probably be posted tonight or tomorrow. And yeah, OTS indicator uses the 1 minute Heikin-Ashi candles or use 5 minute. It works on either, but I enter with the 1 minute. How long does it take to get up to speed on it? On just learning everything, I mean, we have a pretty in-depth onboarding process, like training with like Google Docs and PDFs that go through everything like step by step. So, uh yeah, I would go through that. Um or sorry, that'll take a few days to go through it, probably maybe like a week. Um But as far as this training we did, I think you said you tuned in late. We've been going for just over 2 hours now. Can you cancel anytime per month? Yeah. So you don't have to deal with emailing to cancel. You can literally go into the dashboard. Okay, we make it super easy because I personally don't like doing support for that. So you can go into the account and you can cancel it through your account right here, or you can reactivate it anytime. So self cancellation, there's no crazy stuff you got to get through, no hoops. It's a video training on the Discord community for OTS Flow. Um, yeah, so let's try to share my screen so you guys can see. So you guys see this Discord, right? You guys have access to all that. So what you don't know is we have these secret channels for MarketFlow. So as soon as you sign up and authorize your Discord account through our platform, you'll automatically unlock all of these channels, and this is the onboarding. So um, I still need to add two of these videos, obviously the webinar we're doing right now, so I'll add that in here, but this is where everything is as far as the onboarding goes, and we have Google Docs, and they go in depth on the setup. So this is flow number 3, goes over the condition, exactly what it should look like, examples, why it works. And then let's see. Yes, we go over all the flow setups, flow examples. We have a video training. And then we go into the institutional flow, flow confirmation, entry confirmation, time confirmation, trading checklists. So it goes in depth. It's all that. It's basically a whole course in the Discord now. So when you guys sign up, you'll see step number 2 is authorize and connect Discord. All you have to do is put in your Discord username into here, press give privileges, and you'll automatically unlock all these channels. This is where we'll do the live trainings as well, the weekly trainings. So let me go back here. How long have you been using it? How many students? What kind of results? Oh, this software is, I've been using it for 2 days now. It just got made. But I've been using the same calculations and flow data for a lot longer through the other company. And the results have been really good. We shared that sheet earlier with the trading results and all that stuff. So um, we went over that earlier. I think you said you tuned in late. Yeah, Craig. You won't be kicked out of the Discord or anything. It'll stay the same. Yeah, so you don't have to worry about that. All right, guys. Well, I'm getting hungry, to be honest. Um, yeah, I'm trying to think. Yeah, if you guys want to join, go to otsflow.co. Like I said, the bonuses will be available definitely tomorrow, probably through the weekend. And then I was thinking about doing another like follow-up training session, but I don't know. I might start doing live streams on my YouTube channel every day at like 5, uh, or like at like 6 p.m. Eastern time. So I might start doing that. So watch out for that if you guys want to, just hang out more. Obviously, that'll be a more chill. I'm not gonna sell anything in the YouTube streams. So be tuned out for that because this is fun to hang out with everyone, talk, and go over the market and stuff. So obviously today was more of a structured training. So hopefully I could answer all your guys' questions and go from there. But yeah, if you guys want to sign up, like I said, just go over to otsflow.co and get access to all the bonuses and the indicators built into the platform. Um, and I think you guys are going to be happy as we trade ending out this year and going into 2026. So don't let $200 per month stop you. Like I said, I can't charge any lower than this. This is really the cheapest I can go because I do have $100 per month fee per user myself. So I'm trying to make this as reasonable and make this a complete system so you guys don't have to, ever spend any more money or anything like that. So this will be my complete product. This is what I'm be sticking with for a while and trading with. So, anyways, guys, hope you guys have a good rest of your night. Thank you. I appreciate you guys for tuning in, even if you didn't sign up or whatever. I appreciate you guys' support and tuning in with me. Without this community, I'd be a super lonely guy and trader. So I appreciate each and every one of you. So, anyways, guys, have a good rest of your night. I'll see you tomorrow morning. Hopefully, you guys can get inside and will be live trading with me as soon as tomorrow morning. Once again, that's otsflow.co. All right, guys, have a good one. I'll post a replay up as soon as I can. See you guys.